Hey guys and girls, I hope we're doing all good. Just waiting for every platform to log on live. So we're live on Facebook, live on Instagram. Thanks a lot for tuning in, everyone. Got a lot of things to talk about today. Most importantly, the recession that we are going to have. So yeah, with it, I'll wait for everyone to tune in. Thanks a lot for, hey Pete, hope you're doing well, bro. Yeah, just wait for everyone to tune in, and thanks for spending your Tuesday evening with me, looking at all things that you guys want to talk about. So, see here, Nathan, I love you too. Don't know who that is, but Pete, go Birch, go Pete. Hope you're doing well, bro. Cool. Looks like a lot of people tuning in right now. So, just a few things that I want to talk about today. Most importantly, let's talk about the elephant in the room. As of last, when was this, the 3rd of June, I'm going to read out an article here from news.com if you want to read along with me. It reads, Australia is in recession, Treasurer Josh Frydenberg confirms. Cool. Thanks for tuning in to the YouTube as well. For those of you that are new to these outlets, I put out over the course of the last decade. I couldn't even tell you or begin to tell you how many hours worth of content, free for everybody on YouTube and all different sort of platforms. There's all these talks about social influencers now. Never used to have a light stand for my phone for Instagram, but there's lots of people out there in all different areas. And I guess once again, before the market trend of people going into social media and making videos and whatnot. But thanks for tuning in. So yeah, want to get into this this article. Australia is in a recession. The Treasurer confirms it's official. Australia has entered a recession for the first time in 29 years. Last time we had a recession, I was about 7 years old, 6 years old, and it was a recession that we had to have. A lot of people are still jaded from the fact that we had Paul Keating come out and make it look like it was needed and all that sort of stuff. Cool. Keep the questions coming. I'll get to them a little bit later. But yeah, here we are in 2020, and surprise, surprise, we have a recession. 2 years ago, 3 years ago, I called a global financial depression, the GFD, and here we are. Before you have a depression, you have a recession, and it's an exciting time. I think there'll be a lot of pain for a lot of people that haven't been prepared, that haven't got themselves in the right position as yet. But there's lots of opportunities, and I'm all for the opportunities that are out there. I'm always looking for opportunities, and I'm very, very excited and very well prepared for this time. The thing goes to say, well, the answer to that is yes, and on the basis of advice that I have from the Treasury Department about where the June quarter is expected to be, he said panic buying from families as the coronavirus pandemic hit failed to save Australia from a technical recession. Some economists had speculated that last-minute buying might have saved the economy from going backwards in the March quarter that only includes a few weeks of business shutdowns. Instead, the Australian economy shrunk by 0.3% over the first 3 months of the year, according to today's national accounts. That's the first quarter of contraction since 2011, when cyclone activity shut down businesses in Queensland and Western Australia. National accounts figures from the Australian Bureau of Statistics also showed annual GDP growth slowed from 2.2% to 1.4%. The definition of a recession is 2 consecutive quarters of negative growth, a requirement that is certain to be met in the June quarter, which will include an economy-wide shutdowns in order to save lives and protect the community from the dreadful word with the numbers at the end of it. Less than 100 days ago, our nation was relying on the edge of an economic cliff. The number of coronavirus cases was increasing by more than 20 per day. Treasury were contemplating a fall in GDP of more than 20% in the June quarter. This was what was the economics version of Armageddon. To illustrate how bad we thought it could get, we purchased 5,500 ventilators, but today there is just one person in an Australian hospital on a ventilator as a result of the coronavirus. Mr. Frydenberg said the dramatic falls in spending in the March quarter was some of the largest records in decades, while fear of a lockdown saw panic buying of food and household items. Total consumption still fell by 1.1% in the quarter. So let's just look at from the government website. I'm about to go click on a link here. It's from aph.gov.au. So it's from a government parliament website. You can see that the crest there, the link, and where I'm actually getting this data from. So it says gross domestic product, GDP, feature article on gross domestic product. Gross domestic product, GDP of Australia, is the total market value of goods and services produced within Australia in a different period of time. GDP, measure, blah, blah, where are we here? Recession. A contracting economy is defined to be a recession if it contracts for 2 or more consecutive quarters. So let's look at the definition. Go and Google what your interpretation of a recession is. But a recession is defined as 2 consecutive quarters of negative growth. Lockdowns occurred on the 12th of March. It's been less than 90 days since everyone freaked out and went and bought themselves toilet paper, lots of bottles of water, and all that sort of stuff. And here we are in not even 3 months later, and we're in the middle of a recession. So a recession needing to be 2 consecutive quarters of negative growth. How can we officially be in a recession at this point in time? The answer is clear. A lot of people mentioned to me last year around September. I was making some Facebook lives and talking about the the premise of us seeing rate cuts and things going wrong. In and around the 19th of September last year, we saw early September, we saw the yield curve invert, and we saw that the 3-month Treasury bills were paying much more than the 10-year Treasury notes. Whenever you see an inverted yield curve, generally triggers off recession. This first occurred on and around October 2018, which was right in the middle of when I said that we would see the global financial depression, the GFD, start. The thing that had occurred last year that I had never factored in, no one else here had factored in, and no one could have seen coming, was the sheer amount of the New York Fed purchasing up the balance sheets and buying up all those 3-month treasuries, ultimately pushing up the yield. So that's when we started to see the cracks, and that would overlay, if I pulled the data, I don't have any data or printouts today. However, if we were to overlay that data, it would be much on track to show that we've had those 2 consecutive negative quarters of growth, which would indicate a recession. So when I called, going back 2 months ago, 3 months ago, that we're in a scandemic, it's not that I wasn't being serious about things. It was the fact that I know that they were mopping the floor with this shit, and you're getting the piss taken out of you by buying into the system of what we've got. So yeah, my questions, everyone. I just wanted to open the floor and all the doom and gloom that we've got a recession. Very, very excited to see that we are in a recession. The question, I guess, for everybody is, what are you going to be doing? What is your plan of attack for going through the recession, and how are you, going to profit from it? How are you going to change, your life, your family's life, and be able to put yourself into the position that you want it to be? I think there's a lot of people that are going to be hurting themselves in the marketplace due to the fact that they're fearful. There's people that are selling assets. A lot of people there trying to pay off debt. People are asking me, Nathan, should I pay out all my debt at this point in time? Right? I'm trying to get as much debt as I can still, because 2%, 3% interest rates for the bank, and still a very good possibility that they will be going lower. Why would you want to be paying that debt off? Why wouldn't you want to be, purchasing, more assets? There was an interesting thing which I posted in the Birch feed. If you're not in Birch feed, get amongst it. Hertz. share price. So if we have a look at the Hertz share price and just look at a 1 month chart, it goes to show this is Hertz, the hire car company, now trading at $5.53. It's Hertz Global Holdings. That went up, yes, that's correct there, 112% in a day. 112% in a day. So looking at the growth there, on the Tuesday the 26th of May, Hertz was trading at 56 cents. 56 cents. Currently it is trading at $5.53. Why does a company go bankrupt or enter itself into voluntary administration or whatever you want to call it and suddenly have a 10x gain to it? Simply due to the fact that there's so much money being printed. This is more money that's being printed than World War II, right? It's important to understand where the money is flowing. Is it going into the market or is it coming out of the market? There's a thing called quantitative tightening going back in 2018, which I foresaw coming very, very clearly. This whole situation that we're seeing at the moment, if you could picture watching September 11 and the planes going into the building, we all remember that scene. The feeling that I look at this with the eerily similarities is that I'm literally knowing that the plane's about to arrive. I'm looking at the building, waiting for the plane to arrive. Was it a few days off, a few months off, or a few years off? It's about 2 years off. A lot of people called me a doomsayer at the time. I'm not, right? I'm the most positive guy out there. The opportunity was the greatest thing that was going to come from this. And we are right in the eye of the storm from that opportunity. So some of the things that we need to look at is your finances. Are your finances in order? Have you got the right debt plan? And what I mean by debt plan, have you got the right strategy for knowing what debts you're going to accumulate, what lenders you're going to accumulate debts from, the right products that you're going to be getting debts from, how is your debt structured going through this next cycle. This cycle will be like nothing that we've never seen beforehand, and you need to prepare and plan for that. What is your debt consolidation plan going to be over the course of the next 5 to 10 years? How are you going to pay out your mortgages? What mortgages will you be carrying once we see the collapse of the currency? I don't have it on this phone. Maybe I could get it from Birchfeed. I made a post in Birchfeed yesterday. I haven't received it yet, but I went and purchased on eBay some new currency. I became a billionaire yesterday. A lot of people were like, wow, congratulations. But I didn't become a billionaire in the stance of what you would normally think. That is how I became a billionaire yesterday. What that is a note. It's just a numismatic note. It's a Hungarian currency which occurred, this is from about 1943. I bought it for $7, and it says here it is a EGY milliard pengo, right? And pengo was the currency that was used in Hungary back in the early, it was used for about 20 years, this currency. And this currency, I think it was about from the 1920s to about the 1940s, 21 years, I think, or 26 years was the lifespan of the currency. And then it died of a hyperinflation. So that was my 1 milliard. 1 milliard was an old measuring tool, and it basically stands for 1,000 million. 1,000 million obviously is $1 billion. So 1 billion pengo. So that was a note that they had created. This note was 1 milliard pengo, and then previous to that, this was the same currency. It is the pengo, and it's the Otvan pengo, right? And this Otvan pengo, I may have pronounced it wrong, is from I think about 1923, 1924, and this is only 50 pengo. So from 1 billion pengo from 50 pengo to 1 billion pengo. So it just goes to show that over a period of about 10 to 15 years, the largest hyperinflation had occurred in Hungary. I'm just going to go on bingo. Hyperinflation. I'll read a little bit about it. Due to the reduced tax base, the government resorted to printing money. In around 1923, inflation in Hungary reached 98% per month. 98% per month. Between the end of 1945 and July 1946, Hungary went through the highest inflation ever recorded. In 1944, the highest banknote value was 1,000 pengo. You can go and read up about it. I'm not going to get too far into the hyperinflation, the largest hyperinflation that had occurred in history, and still to this day. But just be aware that there has literally been thousands. If you think that your dollars are, so important, they only are because they've been manipulated in certain different ways. A lot of blood on the hands of those that create these currencies. We're in a position where, it's on life support. It's been in palliative care for the last decade. It's now in a vegetative state, our currency. So how are you going to capitalise on this? So how is your finance structure? How are you going to accumulate debt over the course of the next decade? What debt vehicles are you going to have in your itinerary? What is your debt repayment plan going to be? How are you going to remove your debt before the currency completely dies? When should you get into debt? When should you get out of debt? Obviously, as always, I'm not your financial advisor. I can be, your financial place to get help from. You can hit us up at B.Invested. It's an ad time again, so hit us up at B.Invested, admin at binvested.com.au. If you need help, flick us a DM, flick us a private message, reach out to my team. A lot of people think that Nathan runs a buyer's agency, which I do. I run a very large scale buyer's agency where I buy hundreds of properties on a regular basis for people. However, I do have a full suite of financial services, businesses where I help people. So yeah, can I help you from an aspect of structuring your debt? Certainly. If you'd like help on that, reach out to my team, and I've got the experts when it comes to structuring that debt. So the questions I have for you is, if we know that we've got a currency which is on its way out, they've printed more money than ever before in this dollar-based fiat currency system that we're using at the moment. People think, is the market in a bubble or whatever. The stock market, the Dow Jones, is nearly an all-time high again. Is it going to be without more pain in the future? 100% it's going to have more pain in the future. How did it get back up to an all-time high? Simply, they just printed more money and bought the stocks out of the market. So it's not that the stock went up in value. It's not that property is about to go up in value. It's the currency, i.e. the dollars that you were buying it with, is losing its value. So there's less and less value behind it. You need to have more and more of that currency in order to buy the same asset. So if you understand and truly understand how debt works, we're in a very different currency system than what you believe or what you would have been led to believe, going to school or whatever the case may be. And it's just a very sort of exciting times on how you can actually navigate through the system. So are your finances in order? Have you, rejigged your portfolio? Have you rejigged, are you invested in a property that you shouldn't be invested in? Are you invested into shares that may or may not be the right vehicle? Are you invested into cryptocurrencies? Is that the smartest thing that you could be doing at the moment? Are you invested into precious metals? I've seen a lot of people asking me about precious metals. I made some videos on this the other day. I spent Monday in the office just filming lots of videos to put out there on YouTube. So if you guys are watching from different platforms and not on the YouTube channel, go and subscribe to that. I notice that a lot of the videos that I put out don't make their way to Instagram or Facebook or whatnot. So go and check out youtube.com/Binvested. Make sure that you subscribe and hit the bell for notifications. Put some videos out, recorded some videos, yesterday, regarding silver and gold and whatnot. A lot of people are coming to me saying, should I go and buy all that? Not necessarily the case. Everybody's position is different. It's important to structure yourself correctly through this. Have you been to your lender and pulled out all the equity that you can? Have you got the right loan facilities to get you through this period of time? Do you have too much debt? Do you have not enough debt in your position? Have you, put yourself in a position like tax time's coming up? I did the webinar last week with Ridwan Hannan from One Path Accountants, and looking at from a tax perspective, have you thought about how your tax planning is going to be and how that's going to ultimately roll into your financing and lending and debt sort of a plan on that front. So I'd like to hear, what is your debt plan? What is your method of being able to accumulate the debt? What is your situation and thoughts on being able to pay down that debt? What's the game plan? Because so many people are going to look back from 10 years ago. How many of you are sitting here now going, shit, 10 years ago I could have bought the property in Western Sydney for 150 grand and now it's worth 500 grand. I could have, made whatever decisions, right? Those regrets may look large now, but how will they look looking back in the future, going, what have I missed out on? What should I have done differently? So the time is now, guys. The time is now. You're never going to have the opportunities like what we have at this point in time in the future. So on that note, guys, I'm going to go back over to you and answer some of your questions that you've got. I'm going to start here with some of the questions from Instagram, and then I'm going to head over to Facebook. Nathan, I'm addicted to YouTube channels up till 8 a.m. today. I'm watching your videos. Thanks, I appreciate that. Sorry if I'm messing with your head too much and giving you all the information, but I try and put as much sort of free content as I can out there for you guys to learn and put into your own life. If I can help you from my businesses, I'd love to. If I can't, then it's just good to know that whether it's a bit of inspiration to make that decision in business or whatever the case may be, really cool. So I appreciate the feedback. Privy, if you couldn't buy real estate this year, what would you buy instead? Not asking for financial advice. Looking at opportunities, anything that I can buy below market value, predominantly stuff that would give me a cash flow. I've been mainly buying property this year. Personally, I just bought some properties today that were 50 grand. The last ones that have sold were around the $120,000, $130,000 price range, renting for $200 a week. So, a lot of people think can't go out and get a loan. If you couldn't go and get a loan, you've got access to. I did a block of land the other day at 14,750. Right, Bitcoin prices checking it beforehand is 14,250. For almost the price for Bitcoin, you can buy an actual block of land in Australia. And the good thing about picking up some of those cheaper end sort of properties is that when you can go and obtain finance, you can actually go out and attach a loan to it, pull that equity and be able to build the rest of the portfolio along. You can't necessarily go out and get a loan against Bitcoin, go get a loan out against a gold bar or a silver bar. You could margin lend against shares, but if there's a mark-to-market incident, which was very similar to what occurred in February, you could see a margin call occur on lending on shares. So for me, I'm continuously buying precious metals, continuously buying crypto, not so much in the aspect of buying crypto, but more so as investing money into infrastructure. It's called metal, which is basically buying computers and hardware and farming equipment for farms. I just picked up 1,250 acres. Random thing that I had as a goal. This year I wanted to get to 1 million square meters of land. That was a goal of mine, 1 million square meters of land. I'm almost up to 6 million square meters of land now. So with it, it's cool. Investing in business and different areas of my life. Ashu, hey Nathan, I'm 17 and I've started investing in other ways to make some money. I have 60k to work with and I wanted to know your opinion. Where do I start? And any tips would be appreciated. That's really cool, right? Like when I hear, 17-year-olds getting amongst it and starting to learn. I didn't have 60 grand saved when I was 17 years old. I had about 35 grand saved. There was no one, giving information on the internet. There was no videos out there. I had a dial-up which had to hook through the phone line, and if someone rang out, you'd get kicked off the internet. So things were very different. So, just feed yourself with information, and work out a strategy, work out the plan of attack. Like, what is your plan of attack? Like, have you thought about it? If you'd like, everybody's position is different. If you'd like, you can reach out to my office, flick an email over to my team, admin at B.Invested.com.au, and see, maybe my team can have a chat with you for like 15 minutes and put you in some directions of, things that you can look out for, things that you can do. Have a chat. I've got over 100 staff in the B.Invested group of companies that can help you in all different ways. Right? You don't call them up and they're not, salespeople that are trying to say, hey, go and buy a property or whatever the case may be. There's lots of knowledge there, lots of experience in markets, and if I put together collectively, I was listening to one of my brokers today that's been writing mortgages for 19 years now. So if we collectively look at the resources and information that that the team have, just by asking questions, like, I'm thinking of buying a property. I can't buy one yet. I'm 17, but when I turn 18, what is the best loan structure? Should I be looking for the cheapest interest rate? Asking the questions to people, getting feedback, understanding every step that you take in your investing journey, whether it be the acquisition that you're buying or selling, whether it is the structuring of the deal, whether it is the debt facility that you're going to be acquiring the asset with. You need to be understanding, how is this going to help me get closer to my goals or further away from my goals? And having an understanding, like, everyone's got a different opinion, different approach, different thoughts, different feedback, and you want to make sure that you've got a strategy that's going to help you ultimately get to your end goal, but you've got the right steps that you're taking along the way. So being 17 years old, the biggest thing that you've got on your side at the moment is youth. So that's really cool. I'm humbled to be of inspiration for you. So it sounds like you're going to do some awesome stuff there. Nathan, I'm 19. Wow, more young hustlers. Nathan, I'm 19, hoping to save to buy a small flat by the time I'm 22 with cash around the 160k mark. Is it better for me to save up cash or just go with a deposit? Go for a deposit. By the time you wait 3 years, save that cash up. Unfortunately, the price, this is something that happened to me when I was like 14, 15, 16, 17, is that I would see that the properties, the more that I saved up, the more that they got. I'd save up 20 grand, they'd go up 50 grand. I'd save up 10 grand, they'd go up 50 grand. So, in 3 years' time, if you're trying to save to buy that thing cash, well, what are you trying to save? You're trying to save like 3% interest rate. 3% on 100 grand is 3 grand a year. That property could go up by way much higher. Plus, you've got the rental income that you're collecting. So if you could own that property 3 years earlier, it's bringing you in $50 a week. Well, then there's $50 a week you'd be earning for the next 3 years, which will help you pay down debt, save for your next deposit, whatnot. So if it was me, obviously without giving any financial advice, because I don't know anything about your position, apart from that you're 19 and wanting to buy a property. That's really cool that you're so young and wanting to get into the market. So I'd be using it just as a deposit. Also, Koshi's a dickhead. I saw the TV interview. That's fine. There's been a few of them like that. We all have opinions. We all have views. Sometimes I could really destroy people, with things that I say and how I carry myself. Always got to think about, is it the right thing to do at the time? You've got to ask yourself, like you said, that you're 19 years old. If you think back, you're probably too young, but when I was a kid, there was a thing called Agri's Carney Connection. It was a Muppet that used to talk to kids. And basically there's Muppets on TV try and talk to adults now and give their financial advice. You've got to understand who's a vested interest, who the advertisers are. When you're watching the media, that's why I'm very different about the media nowadays, because I've seen the lies that have been played. I've been in the media, I've been on TV over 100 times in mainstream media, and I realise that sure, I can get views, I can get hits, but if I do the right thing, I get the right knowledge out there, I'm living in line with the person that I believe with a belief system. And there's for those of you that don't recall, I understand the video that's being referred to. Basically, one of my dear friends and also my general manager in the office, Linda, she was on TV watching her fan. She's like, wow, I'm seeing the guy, the Muppet that's in the morning on the news. And then suddenly he started laying into her, saying that you're an idiot, you're going to go broke, you've got debt, etc. The question that I didn't ask him was, why did he advise everybody in 2009? Maybe I can take the gloves off now, right? I'm not on the TV, but why in 2007, 2 weeks before the GFC, did he advise that everyone should sell their house and buy shares? Within 2 weeks, the market dropped by 30%. So I still want to know the answer, but we guess we're never going to understand that, because there's different agendas being played here. Actually, how do you know what properties to buy for a profit and exit and good cash flow? Good question. I think it all comes down to understanding what is your goals, what is your plan, what is your strategy, how are you going to get to that goal. Basically, I've always talked about treating your property investing like a business. For me, buying properties, they're all about numbers. If you have a business, you've got employees, you've got goals, you've got visions, you've got KPIs that need to be achieved. As an investor, if you apply the same vehicle and the same methodology behind it, you'll work out, some deals are good from an equity perspective, some are good from a growth perspective, some are better from a cash flow perspective. Sometimes you need a balance of both. How is that property going to perform for you, and how's it going to help you get to where you want to be? And before I buy any property, I want to make sure that I'm buying it below market value, that I've got strong cash flow. It could be neutral cash flow, could be slightly negative cash flow, I'm not buying it for a tax deduction, or it could be highly positive cash flow. Sometimes I buy properties purely for the purpose of buying it, owning it for a day, a week, a month, or even 6 months, and then selling it on for a profit and taking that profit to do something else with. So it's important to have that plan in place so you can purchase accordingly. Can we ever see a property boom before international opens up? Won't we need a lot of immigration for the next boom to happen? Good question. I don't believe so. We are starting to see a property boom right at the minute. Data is what it's all about. It's showing me a very interesting trend. There's less and less properties in certain price brackets. I've always talked about buying low-priced, affordable homes. If we look at all the stimulus packages which are coming in the marketplace, 25 grand new build grants and whatnot, you could possibly go and buy a house, as I said, 50 grand for a property today that's renting for $200 per week. You could use the grant as a 50% deposit against that thing, right? There is properties out there which price points are completely being wiped out. If people have invested into shares and crypto, you see it go up and take out the barriers. That's what's happening in some areas of the property market. So, very, very interesting times. Do we need to have overseas buyers in order to buy the properties, or is cheap money going to push the prices up? Is affordable prices going to push the prices up? Is lending practices going to push the prices up? And I believe that the key fundamental drivers for this next boom that we're currently in. I'm on 17 on average. How long would it take me to build a large profitable property portfolio? I think I waved at someone, so I just don't know how to use this Instagram thing. So I think it says here, Pete waved to. Anyway, I just bumping buttons on here. how long would it take to build a large property portfolio? I've seen some investors build into double-digit property portfolios in 2020. I've seen some people go from 0 properties on average salaries and average starting capacities to be at sort of 3, 4, and 5 properties in their portfolios. So it just depends how long's a piece of string, how committed you are to your goals, how much you're hustling, how much you're saving away, what are those properties that you're purchasing, how they're going to help you move on from the first to the second, second to the third, third to the fourth, so on and so forth. Ideally, if someone get to sort of 10 property double-digit position in a period of 5 years, that is my ideal goal, is to get people to double-digit property portfolios in a period of 5 years. So some people get there in 12 months, some get there in 24, 36 months. On average, I'd say around the 24 to 48 month sort of time frame. What else? Do you prefer commercial real estate or houses with multiple units? No, I like singular properties. I don't like multi-unit complexes. The reason being is financing. It all comes down to understanding how the finance works. Is the finance going to be able to afford a commercial property, right? You've got to think about it. 40% deposit for commercial property. Block of units would be treated the same. How are you going to get your equity out? Ideally, if it was an ideal world, I'd have all blocks of units, all on acreages in capital cities. But it's not the case, right? Sometimes I realise I need to push myself into a better finance position. So I need to buy a certain type of property. I need to get equity out. So I need to do certain type of move in order to be able to get that. All different properties for all different parts of the strategy. Buying up some shares, I think that they're a bit high at the moment. Obviously not financial advice, but I plan on purchasing some shares later on in the year. Just started your mentoring program, looking forward to buying more properties. Awesome. If you just bought the mentoring program, if you want to hit up my offers, maybe as a part of buying the mentoring program, we can have a bit of a chat as well, because the mentoring program is online. Maybe just hit up my team and we can have sort of 15-minute chat on the phone and talk about your position, and I can have a look over your position and see how I can help you sort of make things happen on a personal one-on-one consultation. So if people are wanting to buy the mentoring program, I'm throwing it out there for all. Just make sure you ask my team to hook up a chat with us. I'm happy to do that. So a lot of thumbs up here. Appreciate the thumbs up. Must be doing something right. $6 million man. How can B.Invested help? In all different ways. I have a finance company where I help people get the loans for and build a debt strategy in order to acquire assets. A lot of people think it all comes down to the deal, but probably 50% of the weighting would be on the loan, the structuring, the weighting against the loan, and how that loan and the debt facility is going to help you acquire the property, because you can buy as many good properties as you can, but if you don't have the money to buy them, then ultimately you're not going to be able to build out that portfolio. Lovely Linda. Hey Lisa. Linda is a beautiful lady. Salary of 200 grand a year. How quickly can I get a double-digit property portfolio? I've seen people do it in 12 months, 24 months to build double-digit property portfolios. So probably the best thing to do is if you are sitting there and going, look, I've got 50 grand a year, 100 grand a year, 200 grand a year, whatever the case may be. Everybody's home life is different, their family unit's different, their starting capital is different, their ability to purchase and acquire those assets is different. So what I'd probably suggest is reach out to my office. You can call them 1300 367 925 or email at admin@binvested.com.au and talk about working out a plan, a strategy. Maybe they might put you in contact with me. Maybe they might put you in contact with one of my strategists to help you sort of build out that plan of attack. So on that note, straight over to Facebook. Keep watching Instagram because I'm sure there's lots of questions here that you guys would like. Go the Eels. I'm not a footy fan, but I grew up in Para, so yeah, it's go the Eels, I guess. I don't, yeah. Wearing shirts lately, collared shirt. Wow. Yeah, as I said last week, guys, I put on a tie last week in the middle of the live. Um, I started to wear some collared shirts. I've got some new staff in my office, and I wanted to have a different direction of leadership and how I dressed in the office. So I didn't get a chance. I actually have got some tracksuit. Look like I'm running from the hood with the tracksuit on underneath, but I thought I'd leave the collared shirt on. After the Facebook Live, I'm going to be going for a walk. I'm going to try and keep this Facebook Live to 1 hour square today. But yeah, trying to, it's business on the top, and I do have pants on below. Hey man, love the info, love to learn from you. Thanks, Michael. Appreciate the confidence in what I do. Michael, recession, who cares? Well, it's a very interesting market that we're in at the moment. All markets are just ignoring the fact that we're in a recession. There's so much manipulation, so much stimulus going out there in the marketplace. Very, very, very interesting time. Christina, what will happen to property prices? A lot of people are saying they're going to fall, but how will property prices fall when money is so cheap, right? We're now at a point like in every other previous sort of boom and bust cycle, you will see the, say a correction happen. You see prices come backwards and whatnot. Prices came back in 2017, 2018. That's when property prices went backwards. We're now at a point where they've turned on the printers. There's so much money printing going on, and with all that money creation, it's got to find a home somewhere. Property is going to be a very, very beneficial market. You can see with the stimulus packages at the moment that they're just printing out so much money that it's just it's got to go somewhere. So they're needing for the housing market to remain high. They're needing for investment into the market. They're needing for trades to be employed and roofs over people's heads. So I think that the over compensating in this occasion, and we're seeing it's going to be evident in the prices. So it's really, really cool. Amanda, keen to get your opinion on entering the market at this time. Just as I was just saying beforehand, I've purchased 6, going on 7 properties this year. I'm loving this market. You couldn't have given me a better market. You could have given me a better market, which was 2 years ago, and I've been buying all the way through this. However, a lot of people are thinking, "Oh, should I sell?" and whatnot. I'm very bullish on the buying side. So, on that note, if you guys would like some feedback on what to buy, where to buy, how to structure, whether it's just a chat and say, this is where I'm at, what can I do, feel free to just hit up my office on the email at admin@binvested.com.au, or give us a call, and me or my team will be in contact to sort of help you strategize that plan. So Parminder, hello. Hey mate, how you doing? John, how you doing, mate? How did I predict that word? I can't say the word with the C in the front of it. How do I predict it? I didn't predict that we would go into a scam of a virus that would be magically out there to that would hit the market. I did, however, predict an economic calamity, which was well predicted back in 2017. It was actually September 2016 when I identified it. In September 2016, I posted in my social media like some of the WhatsApp chats of what was going to happen with debt rollovers and the liquidity getting sucked out of the system, and the need for injection of more liquidity in the system. And basically, they were seeing there's a collision financially that's ahead, and they've had to turn the steering wheel to avoid it, but when they turn the steering wheel, it's going to fly the car off a different direction. They've tried to pull it, and that's where we're at the moment. So not that I predicted that we would see a virus, however, I did predict that we would see the economic collapse and the pain that is out there at the moment. 8 weeks, surprise, surprise, not too sure what you meant. On that, yeah, I just saw the thing here, not Corona, the Depression. We're here in, we're in the early stages of depression. This is not a recession that you have seen beforehand. This is a deflationary period. They're blaming it on a virus. However, it will be massively inflated away via the amount of money printing that they have to put into the system to avoid that deflation. Being a debt-based fiat currency system that we are in at the moment, which we've been in for a long time now, for most of our lives, the currency is very different. For them to have deflation, it's very bad. With interest rates at 0%, they can never go up unless we actually kill our currency. The only way that they will go up is once, inflation has ravished the currency and we don't have any value left in it. So it's going to be very interesting time. Alex, interested to know what you think it will do for property and the implications of inflation on cash holdings, property prices up, cash value down, hyperinflation. Alex, I've been talking about the talks of a hyperinflation. I got laughed at years ago, people saying lay off the bags, get off the coke, whatever. I've never touched, drugs. I've never been coke up my nostril. For all my haters, I wonder where they're at now. But I realised that what I was saying 3-4 years ago was, very outlandish, and the things that I was saying sounded very weird. But I tried to go to the future, look at what was happening in the future, and come back and go, okay, what are these steps and how's it going to lead to? And looking at the possible solutions, the possible outcomes, it only leads to one road, and that is devaluation of the currency and the end of the currency cycle that we have. So what will it mean? It's not that property goes up. It's not that the share market goes up, right? It's just that they're printing so much money, you need more in order to buy the shares. At the moment, they're just flat out, blatantly purchasing up the balance sheet of the stock markets. They've called it. They've said that we're going to do, quantitative easing and purchasing up the balance sheets, and we'll resell those shares and other assets later on in the future. They don't say, oh, we're going to buy the shares, but it's how they call their debt facilities that they use in order to manipulate the currency out there. Kamlesh, how can we buy anything when no one is lending? Good question. There is lenders out there that are lending. We're writing some of our biggest months of loans ever in the history of my firm. I started my lending company, which is Zinger Finance. I think this is streaming to Zinger at the moment. Zinger Finance, I started the business about 8-9 years ago. I think it was like 2012 that I started Zinger Finance. And here in 2020, we're writing our biggest month. We're on track this month in June 2020 for our biggest month of lending for investors and homeowners. So I've got people coming out of the woodwork. I've got every sort of new home company as well, and all those companies sending over people to write their loans. There's a massive influx of people wanting to take advantage. There's been people wanting to buy in this market. They just haven't, had the balls or whatever. But when they're getting paid to purchase these properties, obviously, those that are getting in an earlier point, which would be now, will most likely in the future see the greater sort of upside, because as supply and demand kicks in, they're not going to be able to build enough properties in order to be brand new. So developers are going to start pushing up prices, and it's going to be another bit of rocket fuel to throw into this marketplace. But yeah, if you need help on getting lending, hit up my team. I've got the experts. I didn't build a 200 property portfolio without having a thing or two knowing about how finance works and how money works. So Nate, when do you think they will call it a depression, you reckon? Definition of a depression as recession is 2 quarters of negative growth. I think a depression is defined as 4 quarters of negative growth. If you think about it, right, September last year, the third quarter last year, first quarter this year, this quarter is going to be recession. And if we start seeing bad results coming in from all the companies, we're going to start seeing a lag in GDP. People's consumer confidence and spending will be low. We'll most likely see another quarter of negative growth. over the next quarter, and we quite well could see in 2020 that we will call a depression, but we would need to wait longer before we call it a depression. This is going to be an inflationary depression. It will start off with deflation, which is where we've been for the last 24 months. It will turn into an inflationary depression where people will not be able to spend their money. A lot of people are asking me here, I'll just see it here and it just made me think of something. Hi Nathan, can you share your thoughts on US dollar / AUD short-term 1 to 3 months, purchase too much USD, getting margin called every day, hoping US dollar rallies? It's a very interesting position there. I don't personally sort of short markets and play in that space. However, people are asking me, why is the Aussie dollar rising so much? And it's not that the Aussie dollar is rising, guys. I need you to understand this. Go and look at the US dollar compared to any other currency around the world. It's the US dollar is losing its value. So as we can see these currencies gaining and losing value against each other, we've got to think about debt. How, when they print so much money in our own local currency, how will that have an impact, positive or negative? And looking at the US dollar at the moment, they're doing so many things to manipulate their currency to try and keep it afloat. It could swing back. The US dollar could lose lots of its value. Like if we're going through a point where where they're going to have to print a lot more US dollars, there's going to be a lot more out of circulation. They're going to contract the US dollar. So if we look back in over the course of the last 3 years, and you can see this, like a lot of people ask me, Nathan, how did you get your data to see that this would occur? We saw all the currency starting to crumble, and that was because of a liquidity squeeze. They were tightening of the credit supply out there. They were tightening of the amount of money that was being printed. They were going from quantitative easing to quantitative tightening, and now we're heading back to a quantitative easing period. We're seeing money being printed out and handed out around the world, which will ultimately have an impact on trading of base currencies. And looking at the Aussie dollar to US, it is not the Aussie dollar that is rising, folks. It is the US dollar that is losing its value. As for when it will go up, change, I'm definitely not going to get into speculate that. Hopefully, for your sake, it changes shortly. If we were to see the US dollar, raise interest rates or pull liquidity out of the marketplace in their local currency, I think we could see strengthening in the dollar. However, at this point in time, like, who's going to turn their printers on and how much are they going to spit out at this point in time? I've got a couple of people asking me about the milkshake theory. I don't have too much of an opinion on that. I think that there's some factual parts of the milkshake theory, but I am not, of 100% going in there. That's really cool. I think maybe 50, 60% of it fundamentally would be correct. Other areas of it I disagree with. Nate, for the average Joe Blow, passive income minimum before hyperinflation starts / now. Just think about what your currency would buy you. Money, dollars, currency, whatever you want to call it. What would an average income be? So if you could try and get 100 grand a year now, like, we just believe of currency, right? We have a belief, like when you remove the fact of the currency, people say to me, how can you hold $18.5 million worth of debt? I don't even care about the debt because I know it's not even real. Right? If you think about the matrix, he goes, it's not the spoon that bends, it's the mind that bends, and it's your mindset around how the currency works. Like for me, it's just holding the assets. I want to hold the assets. Like I'll carry these assets that I hold through this market cycle and take them to another sort of financial paradigm and be able to pay today's debts off of tomorrow's dollars. So if you could have sort of like 5 to 10 properties today that are paid out for unencumbered and they're returning you $300 a week, that'd be a good place because it would replace a normal sort of personal income. So 50 grand a year, 100 grand a year, 200 grand a year, the same thing would apply. But how easy will you be able to pay that off with tomorrow's worthless currency out there? So that's more the question. Benny, Hertz is the new Deutsche Bank. It's playing magical tricks like Deutsche Bank. However, I don't have too much thoughts as to why, unlike Deutsche Bank. Deutsche Bank is very, very random, guys, and it's the linchpin to this financial system. If we start seeing some implosions out there when it comes to the derivatives market, we will see a total collapse of the financial system. So be very careful. That's something that I haven't spoken a lot about recently. I did previously a lot. Derivatives. That derivatives bubble is what will implode. If you don't know what a derivative is, go and research it. I'm not going to go into too much detail on it here. But make yourself familiar with the word derivative, and then look out for when you start seeing some issues in the markets and whatnot. Nate, VET, VeChain, you got a bag. I'm assuming that VeChain there, VET. I have been holding VET for a very long time, since it first came out when it was on the Ethereum network. And I still hold it. I haven't actually split the chain yet to move it onto its own chain. I need to. A bit lazy on that front. But yeah, with it, I do own that as a cryptocurrency. For those of you that don't know what we're talking about here, Brad, hey Birchie, long time. Hopefully you're doing well, bro, and family safe and whatnot. Thanks for checking in. Vicky, hi Nathan, hi Vicky, hope you're doing well. Cameron, looking forward to talking with you on a map session next week. Let's do this. Awesome. Look forward to chatting with you, and humbled that I can be of service and be able to help you with the strategy to kick ass with your goals. So for those of you that are new around here, don't know what a map session is, basically it's a strategy session where I help individuals work out their plan of attack in order to be able to build out their property portfolio and their journey. Obviously no financial advice. I'm not a financial advisor, but I think I do a lot better job than most of the smucks out there in the financial advisory space. Not saying that they're all bad. I do know two that are very good, and I've known them for a decade now, over a decade, and I've seen how they behaved in the GFC. But with it, if you guys need help with building out a strategy, like Cameron here, feel free to hit up the team. I am limited with my time allocations now. I'm booked out, I think, largely until September, October, something like that at the moment, with very limited spaces. But I look forward to chatting to you next week, Cameron. Dragon, hey Nathan, you've mentioned before potential stock market crash following June quarter reports. With so much stimulus and money printing underway, propping up the business, do you think the market will crash? Anything is possible in this market. We should not be seeing the rally, but we could if we just print so much money. Is it the share market that is going up in value, or is it simply we're just plugging the holes and it still looks like it's intact? I still believe that when we start seeing the reports, we're only sort of 5 months away. When we start seeing these reports coming through in the stock market, that we will start seeing things implode and unravel there. With it, I'm going to try and keep us to 1 hour this evening. I noticed that our Instagram live is about to end because we're 1:43 minutes left. So I won't be reconnecting this evening on Instagram. If you are on Instagram and you're not on the Facebook Live, go to facebook.com/binvested.com.au, and I'll continue the live over here. And I'm going to wrap it up shortly anyway after I get through your questions. But I still believe that we're on track for that at this point in time. Todd, hey mate, when the cash rate goes into the negatives, how long will it stay there before it comes above 0%? I've got no idea, to be honest. I've never seen anything like what we're going through at the moment. If we look at people compare it to the Great Depression, Great Depression was very different to today. In the Great Depression, they didn't have the ability to print currency like we do. We didn't have a single one world sort of currency, which is, a lot of people don't realize that the US dollar was the base currency of the world. It was very, very different back then. Everything used to be tied to the pound, and it was different system, bread and wood system. This time it's very different. So how long will it stay below 0%? How long will it take to go above 0%? Who knows? But it's an exciting time And these stimulus package, who would have thought, and it could get greater, who would have thought that you get paid $25,000 to build a property or do a renovation of a property? If you combine it with some other first homeowner grants, I do believe later on this month we will start seeing some further sort of grants, which could be first homeowner grants and whatnot. Basically, they're paying the deposit to buy a property now as well. So these stimulus measures, who knows what they're going to come out with next? But it's a great time to be alive. Jane, can you discuss the Homebuilder stimulus, please? I did cover on it. I'm just going to push send there. Bye-bye Instagram this evening. But with it, can I discuss it? So it recently came out. I covered on it last week, so I don't want to bore everyone that's heard me say it beforehand. I think it's going to have a big impact to the market. For those of you that don't know, been sleeping under a rock, not caught up, not had the TV on, been brainwashed. The government have released not the JobKeeper, they've released a lot of that. They've released a housing stimulus package for new builds. People that are, I'm just going to put my light behind here so it looks a bit different. There is a stimulus package, $25,000 if you're building a new property. It could be high if you're buying a first homeowner property. I believe that later this month we could see another 20,000 potentially come out for first home buyers, which would really put a rocket up the market's backside. How will it affect the market? I believe that we'll see the money initially go to people, first homeowners, upgraders, investors that are trying to take advantage of the market. However, ultimately, it's just going to be priced into developers. They're going to end up getting the profit. So they're going to be pushing the prices up. There's more demand, less supply, the inability to build enough stock quick enough. So they're going to want to capitalize on the market. And I'm already starting to see it out there with friends of mine, which are in that sort of new sort of project sort of space, and the feedback that they're giving me of increases in the stock that they're giving from their employers and the developers and whatnot. Ultimately, it's just going to make the rich richer, average people feeling more happier about what they're doing, ultimately pushing those prices up. So it's going to be like pouring rocket fuel into the market. If you think about it, the property market has got interest rates at almost nothing. You can go get a loan at 2.5%, 3%, 3.5%. You've got rental returns which could be in the 7 or 8% out there in a lot of markets in capital cities. And you've also got all these stimulus packages being thrown at you. You're seeing other markets, stock markets crashing. You're seeing hard to get yields out there. So it's just that perfect sort of storm. So, 2 years ago, 3 years ago, I was being like, look guys, be cautious on property. Make sure that you're making smart moves. At this point in time, I think we're going to see a wave where any person can sort of make profit out of property, but it's the smart chess moves that you make in order to, really sort of get ahead in this next sort of journey. So it's an exciting time. Chris, do you mainly structure your loans for interest only or principal and interest? Good question. I just purchased a new principal placed residence, which is going through at the moment. It's a $1.8 million loan, and on that, the interest repayment was about $40,000 a year, which would be like $800 a week, which would be cheaper than renting most properties out there. However, the bank has required for it to be principal and interest repayment. I did the numbers on that, and it's about $80,000 a year, so it doubles the mortgage. And interest rates at 2.5%. Why would I want to be excited to pay down that debt? I'd rather use that capital to service more loans and be able to acquire more assets. So for me, I'd prefer to do interest only, but I do leave all my loans at interest only for a period in the accumulation phase, and then I let them revert to principal and interest generally over a period of 3 to 5 years. When they go to principal and interest, then the increased cash flow on that rental property will cover the principal payment and pay down that loan. So most of my properties now are currently on principal and interest, where they used to be just on interest only. But everybody's position is different. If you'd like to have a chat, I've got the best, the creme de la creme of brokers out there in the marketplace. Reach out to my team and have my brokers have a look and give you a bit of a debt strategy as far as how to accumulate the debt and how to remove that debt in coming years. So yeah. Sometimes I get out of breath because I just talk for hours on end. Josh, hey mate, I'm a bit of a spot where I have an opportunity to grow my automotive trade business panel shop, but it will come at the cost of purchasing a property, and I currently have 0 assets. How the fuck do I weigh up the pros and cons? My business is going strong, but it's not exactly turning off millions of dollars, and I feel I'd rather own property, but the business is the thing that pays for that. Apologies, this sounds a bit broad. Cheers, brother. Josh, it's probably too deep for us to go through over Facebook Live. If you want to maybe send me an email, send it to the email address and just say, hey, Nathan asked to show this email, shoot over to my team, they'll put it in front of me just with a bit more information on it, and I'll come back to you with some thoughts, views and feedback as to how you can, ideally I want everything out there, right? I want to, do you know that taco ad where you get the little girl and she goes, why don't you make the taco stand up, and everyone parades it around in the party. I want to have the taco which has all the extras with it. So is there a way we can pull off the business transaction as well as the property transaction? So if you'd like to hit me up, happy to have a look at that and point you in the right direction wherever I can. And you're right? Like cash flow is important. So sometimes it's not all about property. It's not. Sometimes it's about business. Sometimes it's about other sort of forms of financial instruments. So yeah, Vijendra, hope you're doing well, bro. Is Brisbane still a good investment, and what areas? Probably something for us to chat about areas offline. I'm assuming, Vijendra, without going into too much detail, that I talk to regularly. Yes, investing in Brisbane is still a good area. I'm still purchasing a lot of properties out there, see a lot of opportunity out there. As for what areas, that is obviously something I talk about on live stream because it's like IP and whatnot, but happy to have a chat to you about that. And I think we're sort of due for a catch up as well. And that farm you bought, did you lease it out? No, if you're referring to the farm that I put up recently with the smaller blocks, I've been so busy with everything else, I haven't gotten around it. I know that a lot of people message me about it, and I really apologise for not coming back with everything on it at the moment. But I did acquire that asset and am looking at still rolling that out. It's just that I've had a few other projects mature at the same time, and I've had to draw some attention to that as far as getting distribution chains or supply chains happening in trucking to get to another large property that I've got, which is 1,250 acres, which I recently bought as well. Agro was awesome, right? That Muppet that was on Channel 7, Agro, he's probably smarter than the Muppets that are on TV when you turn the TV on in the morning and the sun rises, giving probably better advice on those Muppets that we see today. So yeah, just a little shout out to my mates there. Adam, Presty, looking good, bro. Good to see you online, mate. Thanks for checking in. Thanks for the feedback. Living in the 80s. Thoughts on rural average properties. I buy all different types of properties. I don't feel that rural properties are good for a foundation portfolio, depending on one strategy. What is the property needed for your next accumulation, and how's it going to help you achieve your end goal? See that Brendan Road here as well is farmland worth investing in. I don't like, it's not producing a cash flow. So like for me nowadays, I can speculate on these larger sort of assets, being farmland and large agricultural land, because I've built a solid foundation portfolio. So, if you have one property and it's sitting there vacant, it's just going to be chomping money out of your pocket each week. And how's it going to help you get to your end goal? Is it even going to go up if it's in a rural area? Out of breath. I need a drink, guys. If we look at building a portfolio, right? Let's say we go buy 10 properties that are 200,000 a piece, and they go from 200,000 to 300,000. It's 10 properties at 200 grand, which is 2 million. The 2 million turns into $3 million, and then you make $1 million there. If you've got access to capital at that point, and you've got 10 income streams at $300 per week, if that turns from $300 a week to $350 per week, then you've got $50 a week times 10, there's $500 a week extra cash flow. You can then start speculating and playing with that sort of more interesting sort of stock. But I do not suggest to go out and purchase those type of properties without having solid foundation property portfolio built in advance. Matt, Nathan, when you extract equity after getting revalued, do you ensure you keep the LVR under 80%? I'd like to do this, but it will push my LVR up to 90%. Reach out, Matt. Flick us an email just with your properties. I can have my team look at this. There's like 400 different lenders out there. Every lender is sort of different with their policies and whatnot. I always try to keep it under the 80% LVR. I see circumstances where it could be more beneficial to go over. In my books, as far as finance is concerned, very, very small, like I'd say less than 1% would be over 90%, but it comes from structuring. Happy to have a look at your position, assist you there from a finance perspective to see, what we can do with that debt and be able to see if we can pull out equity and keep it still below the 80%. Don't be surprised that I see a lot of different banks which may value that same property, 100 grand difference in price range. If you can find the right lender that will lend to you, as well as being able to get the right valuation, you may not have to do that. Josh, double-digit properties in the next 24 to 48 months sounds good. We're going to get you there, mate. We're going to get you there. Whereabouts in Australia do you invest, and how do you choose the area and city to invest in? Do you have any tips for finding leads? I purchase I'm probably Australia's largest property purchaser from a commercial scale, not just my own personal portfolio, but where I help investors locate and negotiate properties. So there's little towns all throughout Australia people would never have known existed. Very familiar with them. I like to research different markets, different towns. So I still spend, I got asked today on a chat, on a phone call with an investor, what do you do on the weekend? Do you go out and have a good weekend and whatnot? I was in the office yesterday. I was going for a walk and I was on the phone yelling at someone about something, fixing something up, and I never stop. I'm always constantly doing something. I spent the weekend, probably out of sunrise, sunset, probably 60% of that time just catching up on the computer, screen time as far as doing deals, researching different things, making deals happen and whatnot. So looking in the market, nothing substitutes the hard work of researching areas. There's no sort of magic town where everything's going to explode. Generally, if a price in a town goes up so high, there's a big chance of it coming down so low. And I like to know those markets as well. Not that I stick away from them or not that I invest heavily into them. I like to see when they go under, and I'm like, wow, I'm the guy sitting on the sidelines going, right, now this shit's too cheap not to take advantage of the market. And there's some markets out there in Australia, especially in New South Wales, Queensland, and all different states, where I can pick up properties that are like 50 grand or 100 grand that were selling for 300 or 400,000 a few years ago, and the market got totally annihilated. So, yeah, I just constantly research, constantly looking, constantly, you may not even buy something in an area for the next 5 years, right? But understanding that market and going, shit, like when I looked at it last time, it, it was very different. And the value there today looked overpriced before and it looked good, but now it looks like a screaming buy. So you just research the markets. If you want to go down the road of rapidly building that portfolio, I have a service where I locate the deals and negotiate the deals and build out my investors' property portfolio. So I can help you on that front as well. Just out of breath. Chris, do you mainly structure your loans as interest only, principal interest? Already covered that one before. Recently bought a property for 120. I don't know if we got issues here with the video for some reason. I don't think I can see myself, but recently bought a property for 120, rents for 220, population well over 10 grand. You reckon we'll see intense increase in rents over the coming years? Depends on the market, depends what's happening in that neighbourhood. Quite well could. I don't even know we're here bought, mate. So yeah. With it, Mithan. Hi Nathan, love your stuff. Do you reckon the 25 grand Fed funding for new homes will lead to builders upping their price for new builds? Yes. Also, do you think it will lead to an increase in property prices in general? Yes. I covered this just beforehand in the video. If you're not there, if you weren't on here, just go back and check back in on it a little bit later. Yes, V-Chain, Thor, on the rise, move from ERC20, bro, be prepared. I do have to do that. Aileen, wonderful Aileen from Queensland. Aileen's one of our senior property managers up there. Yes, I'm not responding to you because I'm on Facebook Live chatting to everyone. I'm just seeing lots of messages come up on my phone. I need a bit of equity from a property purchase with you a few years ago. Got any spare? Regan, let's catch up. I'm going to make a little note to have a look over your properties and give you a review. So I'm going to get the team to organise a review for us to look at your portfolio and where to next. Vicky, is the stimulus for new and old properties? No, it is for new properties only. However, I feel that will overflow into the price of new properties will just get jacked up in price, and then there'll be a separation, and then people will start piling on the second-hand properties, and the prices will rise equally. So, Nora, hi Nathan. Hopefully you're doing well, Nora. Hopefully you're having a good week. Michael, how many depreciation properties should one have in a foundation portfolio? As for depreciation, I always look at the sort of cherry on top. We need to chat, or I'm about to send you an email a little bit later on this evening, Michael, just because something occurred with the most recent property, which is a newer one that we're looking at, but I've got something as a replacement for you. But looking at how many depreciation, if you've got 10 properties in your foundation portfolio and they are modern, well then so be it. They're modern and whatnot, but I wouldn't go out specifically chasing depreciation. It's just a bonus. Ultimately, we want to make sure we've got the cash flow and the below market value there. Sam, why don't you work so hard and not outsource your properties to property managers, Ray White, and close all your other businesses, buyers agency, etc., and retire? Good question, Sam. I run a firm called Blink Property where I manage everybody's properties. So if someone has got properties, I'd like to manage your properties. If a lot of people watch my videos and say this is great, love what you do, love what you're about. You're going to be paying a real estate agent, a Ray White, LJ Hooker, whoever, to manage your property. Why not have Nathan look after your properties? Why do I work so hard? I just do it for fun. I was talking to someone earlier on today about how I treat money. I view money and my life, and why I don't get so stressed about carrying so many things that I do on my day. It's just a game for me. I have fun doing what I do. So with it, I don't manage any of my properties personally. I have about 20 staff. Like I just had Aileen on Facebook Live here writing a message. In her office, just on the Gold Coast alone, there's like a dozen staff just in that one office on the Gold Coast, where we manage other people's investments. I do the businesses for fun. Like when I quit my job, I was 24 years old, and every day I was heading to hospital because I thought I was having a heart attack or something was wrong. I got a tumour, whatever the case may be. And I do my business for fun. I get a great fulfillment out of life's work. There's got to be something from when you get out of bed in the morning to keep you going. And for me, that's building a empire and being able to make cool stuff happen with cool people. Now, did you get an outcome on your legal battle with that house that burnt down? No, not as yet. I have got my bulldog lawyer, which loves suing people, onto it, and she's doing an awesome job at that. So we'll have an outcome. Of course, I'm going to win from that. It's really obvious, but yeah, it's still working on that. Very poor property management there from a property manager who had a property. Michael, what do you charge for your parking spaces on the site where you have your shipping containers? Do you base it on the size of the vehicle? I don't actually charge like parking spaces. It's all just shipping containers and storage. For it, there's some yards which people store machinery and car parts and stuff like that, which is rented out on a lease. It just depends on what someone's trying to rent on a property, but I do rent out some of my properties more uniquely, and they're more of the farmland and agriculture and larger sort of places. I did a recent check, and I've got just under 140,000 square metres of land in northwestern Sydney. So very close to all the metropolis, and storage space and whatnot is needed out there. So that's what I do there. Luke, hi Nathan, when you talked about the dollar dying, what will be replaced with and what happens to the debt? Thanks. Good question, Luke. I don't know. I think that we'll see some sort of digital remnants of the dollar. They might even call it the dollar still, but it will be the system that backs it that dies. So if we look back in 1971, President Nixon in the US created the petrodollar, which was where they removed the Bretton Woods system and backed it by oil and made the US dollar the base currency of the world, which was basically the theft of everyone else's money. However, there's been many different changes over the years when it comes to sort of said currencies. It may not just be that we could see the hyperinflation occur and they just print so much money, everything rises in value, they can't control the currency, just like the Hungarian pengo from the 1920s, 1930s and 1940s when it eventually died. It's going to be very interesting to see how it all pans out. I've never seen it happen beforehand personally and lived in an area. So Tarina, I've just started following the Blink Property Group. Is there an offices based in Sydney / Western Sydney? Yes, in my B.Invested headquarters in Norwest is where I've got the bulk of Sydney. So within about 3 metres, 4 metres of me, I've got a team of property managers. I've even got a new staff starting next week, constantly growing that the operation. So here in my office in Bella Vista, I've got a base as well as on the Central Coast. I've got other places around New South Wales as well. So if I can help you on managing your properties, that would be really cool. I'd love to have the opportunity. If you're going to have a normal real estate agent look after your properties and do an average job on it, I manage people's property portfolios very differently than the normal real estate agents out there. Ross and Nathan, do you think there will be building stimulus stage 2? Quite possibly. Anything's possible at this point in time. So, Nate, should I buy up in Moree? No. One place that I hate in life is that place. I personally have properties that I bought there many years ago. I've done tremendously well by properties burning down and getting insurance claims on them. However, they're just more of an admin issue, and I would not be buying there myself. So if there's one place that you'll never see Nathan Birch be buying in, it will be in Moree. I can tell you that as a very, very clear and confident fact. Josh, yeah, can't wait to build an empire with B.Invested. Look forward to helping you kick ass with it, mate. Hang on there. And yes, answer my question. Good question, Nate. I want to know his opinion too. Sam, do you follow any large property investors? Harry Triggerboff, what are your thoughts on develop and hold properties? Example, build 50 apartments and rather than sell, keep them for a long term. Good question, Sam. I don't follow any other investors out there. I've always tried to build my own strategies and making sure that my properties fit in line with that. I've got a strategy that works, so I just keep hustling at it and refining it and improving it along the years as I've kept building my portfolio. As for developing and holding or selling the properties, I'm not a developer. I'm a property investor. I couldn't be bothered going to councils, dealing with land and environment courts and all that sort of stuff. I want to accumulate assets. So the difference between my model and say Harry Triggerboff, he's got debt, he's got investors, he's got other people's money, he's got a board to be accountable to and whatnot. I just answer to myself, answer to my banks, and making sure that I'm purchasing those properties well with cash flow coming through. So my total business model is very different. It would be like saying if you're someone that grows corn or someone that build a system like McDonald's or whatnot. So different. Yes, we're dealing with food, but we're dealing with different elements of the supply chain. Yes, we're dealing with a vehicle. If you're a car mechanic, an engineer for a car company, a car salesperson, or a race car driver, or an Uber driver, you will see different skill sets, different people with the same one vehicle. So yeah. Steve, when inflation hits, is it worth paying off all the debts? I'll have to wait and see. Before the currency completely dies and turns to shit, I will probably pay off a large amount of my debts, but I don't believe that it will be for another sort of 3 years, 5 years, 7 years, 10 years. It's important to carry that asset base through the market cycle. So I will wait and see. I hope to pay out my debts at that period of time. It might come at a sacrifice of like 10% of my portfolio to pay out all my debt, or 5% of my portfolio, or whatever. But yeah. Amanda, what about parks? Look, I'm not a big fan on regional towns. I did recently have to purchase something out that way on the opposite side of the Great Dividing Range for a project. So I did purchase something out not in parks, but out in that vicinity, but only purely because I needed it for a project. But as for buying rental properties out there, I'd rather keep it to a capital city. Tarina, no, sorry, not lucky enough to own properties here. I have a property management background, always curious to learn more and new skills. Send over your resume, always looking to hire and grow and expand our team. What have we got here? I've got a jet, guys. I've got a jet, so I'll answer the last few questions. Cheers for the economy update. What's your opinion on regional property in 2020? It could go up, may not go up. I'm more bullish on capital cities because we're seeing some areas that have been hit over the course of the last 3 years due to APRA changes, investor lending and whatnot. And some markets in capital cities have been knocked down by 20 or 30%. I'm picking up in Brisbane for 200 grand for a house, for 150,000 for a townhouse. They rent for like 250, 300 bucks a week. What would I be getting in a regional property? There is other capital cities that I'm purchasing in, which I'm picking up for 100,000, renting for 200, 250 a week as well. So I'd rather buy in those capital cities. Regional properties, it's always random sort of growth. They go up at different times on different demands. And so 2023, how we're looking, I don't think we're going to see it before 2023, a hyperinflation. I think it could be, 2028, 2030. Like the currency is dying. I wouldn't like to speculate on when. I think it will be fast. It could be 12 months, 24 months, 36 months when it would occur. But we're not at that point. We're still in the scarcity. They're going to need to print more currency. Money's got to flow out there in the system and find a home, and that's when we'll find it occurring. Nice shirt, appreciate the feedback. And last couple of questions here. Looking for my third investment property this year. What is the best way to work with you, and what's the best way to get the ball rolling? Dave, if you can flick my office a message at admin@binvested.com.au. I personally locate the deals, negotiate the deals, and build out the strategy for my investors. I've got a team of like 100 staff in my business where they help out from all different areas, whether you need help on a legal front for the structuring of it and the exchange and purchasing and the estate planning, can help you on that front. Whether you need help on building out just a property strategy, I do things called a map session, which is, I think it's about $495 for a map session where I look at your position, give you a bit of strategy, give you a bit of direction, and build out a plan of what you could purchase and how you could purchase it, and build out that sort of strategy. That's probably the best first starting place. If you'd like to book in for a map session, as I was saying beforehand, spots are limited because I only have so many hours in the day. I'm sort of booked out over the course of the next few months as well, but I'm sure that somewhere in the next couple of months we could be able to book in a map session. That's probably the best place to get started. Maybe even speaking to my finance strategist to see if we can work out a good solid debt strategy for you for accumulating the debt, and also consolidating the debt on the other side of things once you build out that portfolio. Lots of questions coming through, guys. Got some got some questions here. Any plans to live it up like Dan Bazarian? 10 girlfriends, private jets, and a massive mansion. Probably about 6-7 years ago, I was like that. I went out buying like $1 million worth of cars, and I had lots of girls on the run and whatnot. But at the moment, I realise that it's unsustainable. So I'm all about sustainability nowadays, not planting trees everywhere and whatnot, but more for a sustainable lifestyle. And there's a lot of distractions in life which can take you off by field. So Dan, if you look at Dan Bazarian, a lot of his is just promotional. A lot of those girls that are around him, are they his girls, or are they promotional models that work for him that are employed by his brand in order to sponsor his lifestyle? So everyone starts talking about he can sell weed and cigarettes and his own sort of personal brand. So there are nice country towns, but not much there to make you much money, like growth and capital areas, correct? I was just saying, we haven't seen that fond fellow for a while. It's pretty funny. Where is he or she? On that note, guys, I just want to say thanks for tuning in again to watch me talking about what's happening out there in the economy, and for you to have confidence in what I do and what my team does. If there's any way that I can help you, I'd love to be a part of your journey in other capacities. Obviously, here we are, talking about strategies, talking about ideas and whatnot. But from helping you sort of put a plan in place, reach out to my office, have a chat, start a conversation. You don't know where that could go to. It could be helping you on financing the deal. It could be helping you on building a strategy for the deal. It could come down to helping you actually build that portfolio by building the deals out for you. So on that note, look forward to catching up with you next week. I'll see you next Tuesday, and bye for now. See you guys.